It's a real pleasure to be speaking with the MD and CEO of East African Breweries today, Andrew Cowan. Andrew, when I first saw you, I was looking for you. I couldn't see this whole new svelte image. It is in line with these fantastic results. Well done.
Thank you very much. It's amazing what a bit of running can do for you.
No, well done. Andrew, look, you know, I was looking through the results this morning. They were really strong, top to bottom. I couldn't find anything. You even put up the dividend by 25%. How do you characterize these half-year results?
I mean, from a numbers perspective, Ali Khan, I'm really pleased with them, but I think it's important to put this 6 months into context. So we are 18 months into a 5-year strategy, and the first 6 months of implementing that strategy was this time last year when we had the 2 general elections. That was harmful to the business. Demand was suppressed, and therefore I would argue that we need to not run away with ourselves, because this performance is in part lapping a soft half this time last year. The other thing that happened in the first half of last year, when we were in the eye of the storm of those difficulties, was we took the decision to continue with our investment programme. So we completed a £1 billion investment in spirits in Nairobi and in Uganda.
This is tackling what the lower end spirits market, is it?
It's actually the mid-range.
Mid-range.
We also invested in the lower end, which put more on beer. We committed to the Kisumu plant in the west. And
just tell people that figure around that Kisumu plant commitment, because as far as I can see, that's probably the biggest FDI we've seen, if you call it, you're a local company, but in comparison.
Yeah, it's in the scheme of things, it's huge. It's a 15 billion shilling investment, and the way I characterise it is, we've been here 97 years. These are the sorts of things we should be doing, because there's demand to sell more Senator, which always comes at the expense of illicit, which means that it plays a much bigger role than just the commercial return. It's about getting Kenyans out of illicit and into clean, healthy, safe product.
So 1 billion there, 15 billion Kisumu. So whilst the market was tough, you were actually making hard decisions and putting money on the table.
Yeah, the local management teams took those investment decisions, and I think that a combination of lapping the soft half and taking advantage of those investments, commercialising those investments, has been the 2 drivers of the growth.
So if you look at the growth, you know, obviously your flagship brand, iconic brand, is Tusker. I mean, historically, it's been a huge percentage of the actual business. How has that performed, in your opinion? A
Tusker family is in growth. I would like every single aspect of the. You can get Tusker in cider, Tusker Light, Tusker Malt, Tusker Lager. I'd like all of those 4 facets of the brand to be in growth, and we could do better on Tusker. But as a brand family, it's still in growth. But what you need to, I guess, recognise is Kenyans are becoming more sophisticated with what they drink, and so whereas 20 years ago beer was it, Kenyans are more and more now drinking a wider repertoire of drinks, including spirits and also beer, which is why we've invested in diversifying our business across the beverage alcohol category.
So just tell us a little bit about the spirits investments and what's exciting you in that compartment.
What the investment in spirits locally has allowed us to do is to bring international trademarks such as Captain Morgan, such as Black and White Whiskey.
Some people might not know what you did with Captain Morgan, because that was quite interesting, right? Yeah. You domesticated the production. Is that what you did?
We did,
yeah.
which did 2 things. It made the brand local, but with all the international assets, but it also made the brand affordable. And so for under 300 shillings, you can participate in Captain Morgan. That wasn't the case before we did that. And actually what the plant allows us to do is to take a number of other Diageo international brands and bring them in locally and present them to Kenyans at prices they can afford.
So that's serious progress, and you're seeing that pay off?
Our spirits business was in really good growth. It was in high double-digit growth, and continues to be the driver of the underlying growth of the 13%.
I remember the time when you had the challenges around the beer, you know, the Senator beer, when they put back the duty on it, and it became kind of out of reach for a lot of people, that the spirits really replaced the beer. Tell us a little bit about the lower end, the cheaper spirits. You've got spirits which are at price points below Captain. Yes. Yeah. How's that performing?
I mean, a couple of things on that whole sector, that whole cohort. I mean, we recognise that the vast majority of consumers in Kenya need to have products availed to them at affordable prices, and so I think there were some historical mistakes made on Senator. with duty increases, etc. I think they are well in the past. We've got a very sensible, sustainable, predictable approach to duty now, which we welcome from government.
More policy making certainty now.
Absolutely, and it's allowed us to get Senator back into 36% growth in the first half.
Wow.
We've opened 4,000 new bars to be serviced from the new Kisumu Brewery, and we've launched some lower mainstream spirits brands such as Triple Ace Vodka, which is a high quality spirit but at affordable price. And that's designed to recognise that we will play at the top end of the price ladder, we'll play at the bottom end, we'll play in between. But our job is, having been here for 97 years, to service Kenyans with drinks that they want, that they can afford.
Let me now turn to the geographical component of the business. Of course, EABL is not only in Kenya, it's in Uganda, it's in Tanzania, DRC, I think you supply into that market, South Sudan. So tell us a little bit about what that's looking like to you. You know, what is East Africa doing? Where are you seeing strength? Where are you seeing weakness, if any?
Okay, I mean, in terms of, there's probably 4 markets I would touch on. We've just talked about Kenya.
Yes.
So the other 3, I would talk about South Sudan.
Yeah.
Very, very briefly, we kept an investment profile in South Sudan when the difficulties happened. The initial period of peace that has happened recently, we've profiled that investment up, and we've started to rebuild our business there. So it's a small business, but it's got some potential over time. So we feel good that that is a risk-managed, growing business. In Uganda, we have invested in the core business. So the Bell brand is now back into growth. We've reformulated and improved the product, the liquid, and we are investing in engaging consumers with that brand. So the Uganda business is in 12% growth at the half, which we're delighted with, and expanding margins. And then in Tanzania, it's the one I'm really delighted with.
Because you had to do some digging deep in Tanzania at one point, I remember.
Yeah, I mean, the new MD, who not so new now, has been in the business for 3 years, has really clarified and simplified the growth code for that business. And actually, the results, 26% growth this half, but that's off the back of high double-digit growth the whole of last year as well.
That's it. Yes, that's right.
So, yeah. So nice anecdote for you. Serengeti Trademark is now the #1 beer brand in Tanzania.
Congratulations.
And so it should be, because it is an authentic Tanzanian brand that sponsors a Tanzanian soccer team and all sorts of things that are Tanzanian. So we're very proud of that. And the beauty of that business is the job has only just started. So the business is in growth, it's back into profit, it's doing really well, and we think there's lots more to go for.
So taking all of this together, Andrew, I'm seeing somebody who's reinvigorated, I'm seeing somebody who's excited by what you've just delivered and what you've spoken about. Is that the correct characterization to take away from us?
I would add one more word, which is all of that, plus humbled about the 6 months we've had, because it's all about completing the job. And in H2, we will lap 10% growth from H2 last year. So my job and our job as a management team is to put activities into H2 that finish the job this financial year, but create new momentum into the next financial year, which starts on July the 1st. And our code for that is open and commercialise the Kisumu Brewery, continue to bring to potential the mainstream spirits plant that we've invested in, and then of course continue the progress we've made on bottled beer, which is the cornerstone of our business. And those 3 priorities will do the short term as well as the long term.
Is anything keeping you up at night? That might, you know, the trajectory you've sketched out, are there any risks out there?
I think, Ali Khan, I'm really, really confident in the commercial strategy. It's simple, it's straightforward, and it's working. If anything keeps me awake at night, and I do sleep reasonably well, but the external environment is unpredictable. Dusit was upsetting as a resident, and unpredictable.
Everyone bounced back. I mean, you know.
And that's the Kenyans, isn't it?
Yes.
This time, it feels like a long time ago now, but it was still unpredictable. So I'm alive to the external environment, be it regulatory, climate, terrorism, etc. And we have a very keen eye on mitigation plans to ensure that when those things happen, and they will happen, that we are sensitive to them, and that we protect our shareholders by having robust business continuity programs.
Well, those shareholders are probably quite happy because you've increased the interim dividend, you've got back on the growth path, you've delivered a really great set of results. Andrew, it's been a pleasure speaking with you today, it really has.
You too, thank you very much.
Thank you.